Please read the disclaimer carefully. The information contained in this TV show is not tailored for you and is provided for informational purpose only. In no way shall this TV show be considered an investment advice to you.
Hello traders, I'm going to share with you my trade idea on the S&P 500. It's March 21st and let's start. As a solid base trading activity, usually my trade ideas are based on market fundamentals rather than technicals. However, this one has additional and exceptional parameter that can be visualized as follows. I'm going to draw some lines here. Basically, the lines are considered as schematic rather than accurate points or accurate price. So please take these lines that I'm drawing as schematic and not accurate. But it can present the general idea of my trade idea. The lines that I draw until now are the market movement since 2007 until now. This is the point where the subprime crisis started. It was 2007 and we saw a free fall of the market from that point until 2008 or late 2008, the beginning of 2009. Take a look at this movement. These lines presents the Elliott wave theory. Elliott wave theory provides us with some information about what is the general trade or the long-term trade of each and every market. Here we see that since 2007 until 2009 we had a major downtrend, and from that point onward we moved to a record high in 2017. So having this picture in front of us, the only question left is when it is going to happen. Asking when it is going to happen, I mean these lines that we can see here on the chart. Okay, this is the expected movement. This movement is going to happen during the upcoming weeks, months, years of the market activity. So I have a trading plan. The only thing that I need to identify is the perfect timing for market entry. Timing is a crucial parameter in successful trading activity. In this specific trade idea, it gets much higher importance. Usually a massive market correction involves high volatility and rapid market movements. Usually individual traders get lost under such turbulence. They either rush to place a market order, being knocked out, or late in entry, thus losing the opportunity. So let's take a look at the chart again. This is the period of time that the market went through a rapid downtrend or massive collapse during 2007 and 2008. This is the subprime mortgage crisis, of course. Here, this is the point where we saw the new buyers entering the market. Now, from that point onward, we more than doubled this big crash movement, of course. Usually, price supports or bottoms takes time to build up, but market highs are there to stay for a short period of time, and the market highs are much more volatile and much more aggressive. So here we see an aggressive movement since the beginning of 2017, a strong movement to the upside alongside the US elections, and we all know the results. And from that point onward, what I'm expecting is a sharp correction or a free fall of the US market. Now, usually when the market is falling, it is falling faster than it goes up. So this is the movement that I'm expecting over the next couple of months to 1 or 2 years. Usually, a bear market is starting when we are moving 20% from the price record. It's going to be somewhere around here. Only here we are going to start, or we are going to declare a bear market movement here, somewhere here. the bear market is going to start. After this first rapid movement, we are going to see a bear market, or we are going to be under bear market conditions, but this is the point where it will be too late to take the action. Now, we have to identify the right entry before the bear market will be declared out there in the financial media and so on and so forth. We are going to see very strong and sharp movement to the downside. Let me draw a micro picture first, and then we'll get a better sense of when it is going to happen. I'm drawing the lines, the Elliott wave lines of the first market collapse in the subprime crisis, and now I'm going to draw the lines of the market uptrend. And this is where I'm expecting the market to move back to the downside. We have the lines here. This is in Elliott wave, and I suggest that you will go and read what is Elliott wave theory in order to understand what I'm drawing here. This is line number 2. This is the major and the strongest line in Elliott wave theory. This is 4 here. Line number 4, it's a correction wave, and the wave number 5 is the last that we should see in this current market uptrend. From that point onward, we are going to see the same movement we saw in the subprime crisis. These lines are line A, and then line B, line C, which is the strongest downside movement, and then line D, and then wave E. A, B, C, D, E is a downtrend wave, or downtrend waves that provides us with the idea when we are going to see the end of the downtrend and start a new trend to the upside. Here, wave number 1, this is where the first and the smart buyers are joining the market. And then we have line number 2, which is the correction here, and the big wave. And here are, this wave actually provides us with a better sense of upward trend in the markets. Usually we all know that the market is up-trending, and we can join the trend in some specific points. Usually technical traders are joining this market. Fundamental traders and well-known traders are joining the market usually at wave number 1. Now, the fools are joining the market here, usually at wave number 5. This is where the fool buyers are joining the market. Those who doesn't understand the market psychology and trends, these buyers are joining the market at the last wave of the uptrend. From that point onward, what we are going to see is the following line again, and then we are going to see something like this, which is a correction wave to the downtrend, and right after we are going to see a free fall, a big wave of downward movement, wave C, and this is where I'm going to stop. My position actually will be closed here because I don't want to be a full seller, and I'm going to end my trade here, close my position, and wait for further instruction or further market movements. If you want to know when I'm going to take the position, I invite you to our training room and live webinars in order to be updated on our next activity. Until our next show, have a great day, and of course, be ready to our trade idea. Bye-bye for now.
Please read the disclaimer carefully. The information contained in this TV show is not tailored for you and is provided for informational purpose only. In no way shall this TV show be considered an investment advice to you.